Everybody, good afternoon, good evening, wherever you're watching me today. My name is Peter. Welcome back to Invest with Peter. So today I'm going to be talking about a couple of things, but before then, let's talk about if you've subscribed. If you're still watching me and you've not subscribed, please, what you're doing, this is actually free. You don't have to pay anything. It's not going to cost you anything. Just click that like, subscribe, and if you have any question, you can ask me and put it in the comment section. I'm going to go there, answer your question straight away. So now today I'm going to be talking about a couple of things, and I'm going to explain to you what's coming up this week because we got a big week ahead of us. So first of all, the PCI came out last week Friday, and it actually met the expectation. Market was expecting 0.3%, and it came out exactly 0.3%. You might be asking yourself, what do you mean by PCE? So PCE is personal consumption expenditure. So, and you might also be asking that what is the difference between PCE and CPI Consumer Price Index? Well, I'm going to be talking about that. So PCE, I'm going to explain to you what PCE is according to the book, right? So a PCE is a measure of a price that people live in the United States, because this of course this just for people that live in the United States. PCE is a measure of price that people live in the United States or buying on their behalf, right, pay for goods and services. So the PCE price index is known as capturing inflation or deflation, right? So across a wide range of consumers' expenses and reflecting the changes in consumer behavior. So this is actually the preferred tool by the Feds to see the level of inflation that is actually happening in the economy or within the economy, right? So the Feds actually prefer using PCE numbers to using CPI numbers. So it's actually is as important as CPI data. So if you're an investor, these are the things you need to be looking at to understand what's going to come, in the nearest future, or what's going to happen, to like predict what's going to happen to the economy. Because as the economy is affected, your portfolio is going to be having issue as well. So if the economy is booming, we are in a bull market and all that stuff. So now the PCE came out 0.3% as expected. And well, some analysts were talking about, they were expecting it to be lower than that, but it actually met expectation, even though the inflation is still up there. It hasn't come to the level that the Feds are actually looking at, because Feds still insist that they're not going to be pausing or cutting rate until they see 2% CPI number. We're at the moment at 5.0% at the moment. So rumors are that they might even be cutting rate. They might start pausing. They might probably pause rate, by the end of the meeting they're going to have this week, and, surprise the market. We don't know yet. Some people say we're in the bull market. Nobody knows. So now let's go back to the earning report, right? The earnings that we had last week was a very good one. I can actually say 80% of the companies that reported their earnings last week actually met or beat the expectations. So that is actually helped the market to this point. And that's also what the, analysts and Feds are actually looking at, is the earnings is going to be determining where the market direction is going to go, or maybe it's going to be an earning recession for the market. But at the moment now, there's nothing like earning recession. So, look at Microsoft. They gave us a very good, outlook for their company, and they beat earning easy like that. Even Amazon, that I actually thought, if you watch my previous video, I actually said in that video that I don't believe Amazon's are going to beat earnings. To my surprise, they beat earnings, even though they had issues alongside some other part of their business, but they beat earnings to everybody's surprise. So, imagine companies like that, and you'd be like, well, you bet against them, well, it goes the other way. So people that do options, they understand what I'm talking about. Do options on earnings, well, if you get caught, you're going to have your fingers burnt. So that's why I stay away from options anyway. I don't do options. I'm a long-term investor. But I always say, if you want to invest during earnings, be very careful. It might go the other way. So Amazon reported earnings, and some big tech company also reported their earnings and actually met the expectation of the market. And that's why we're still running, because before the reports, anyway, market was actually going down because of some issue around the economy and all that stuff. So by the moment those companies reported earnings, the market actually kick off again, and market start going up again. So now we have another set of company which I'm going to be showing on the screen as you're watching me now. And these are the companies that are going to be reporting earnings this week as well. I believe AMD is going to be reporting earnings. Apple at some point this week is going to be releasing their earnings as well. So, we still have a lot of companies to release earnings. So anything can still happen at this moment. But I believe with the look of things, most of these tech-heavy companies are beating earnings like no tomorrow. So I believe Apple as well and AMD will do the same. I hope so, because if Apple released a bad earning report or outlook, guess what? Market is going to turn the other way and start flying down again. So I believe market is going to be good this week, and we have FOMC on May the 3rd. May the 3rd is actually on Wednesday. So they're going to be telling us after the meeting what they've decided, whether to go by 25 basis point or to pause. Rumor has it that they might even start pausing from this end if First Republic Bank, right? I know you've heard about this bank left and right. People have been talking about this bank like no tomorrow. First Republic Bank is going down. And some people even say by Monday, we're going to know if they will be closed forever or a particular bank, because during the weekend we had JP Morgan is trying to buy this bank for $17. Hopefully it goes through. If not, this bank is going to be collapsing totally, and it's going to spook the market come Monday. And we might have a red Monday or something like that just because of that. And that might actually prompt the Feds to change their mind if they have actually decided to raise the rate by 25 basis point. Because at this level now, I think if First Republic Bank goes down, there's no point raising any rate again. They should probably start pause the rate at this time. Wait and see what the effect of the rate they've been raising for a while, till June, July. Then from July, August, they're going to start. They might start cutting rate from there. But at this moment, market is actually, priced in 25 basis point. But if we get a pause from the Feds, guess what? We are probably or potentially in a bull market again. But before then, how are you going to play it safe? Please don't listen to people that says, oh, we're going to have this, market is going to come down minus 70%, minus 60%. Fear mongers out there. If you want to be investing, you better start investing, especially if you're a long-term investor. Do not wait until you see a green light. The best time to start buying stock is now. Last year, June, when the market went down, I believe that was the bottom of the market. No one can tell me that wasn't the bottom of the market. The June chart, 2022, S&P and NASDAQ, that was the bottom for me. And that was when I started dollar cost average up until now. So if you're still holding the bag, waiting, putting your money aside, well, you are doing, you're not doing any good to your portfolio and to yourself, because because once we get into a bull market and you start buying, well, you cannot be compared to somebody who bought at the bottom of the market, or somebody who bought last year and his portfolio is probably up there now. But well, anyway, it's your money, it's your choice. So I'm not saying you should buy because I'm not a financial advisor. I'm just telling you what I will be doing and what I've been doing. We may go into a recession. Market has agreed. Market has priced that in already. Yeah, you're hearing that from me. Market has priced that in already. So even if we go into a recession, a quick and sharp, shallow one, then we're going to be back out again. So that will provide a buying opportunity again for long-term holders. So anyway, I don't want to be talking much about this stuff today, because you are an investor as well. You know what I'm talking about. Don't wait until you see the green light. Dollar cost average this year into solid company with pricing power, and you're not going to regret this. Well, we're not going to talk about the, Jerome Powell, issue that he had, the Zoom meeting he had with fake Zelensky. I'm not going to be doing that video on this one. Maybe on the next one, I'm going to be analyzing what he said, because this guy was actually speaking to some Russia prankers. He thought he was speaking to Zelensky. But to my surprise, I was thinking, if you're actually speaking to a president of a country that is going through a war, why will he be interested in the market outlook of the United States? That shouldn't be his priority. That should be where Jerome Powell should be thinking, am I actually speaking to the right Zelensky? Because in that video, I've seen that video, and you must have seen it. If you've not seen it, just go online. You're going to see that video. They were asking Jerome Powell about the market outlook for 2023. And he was just telling, I was like, why will you even be telling a country, telling a president of which his country is going through a war about United States market outlook, it doesn't correlate to me. So that would have been my place where I'll be asking questions. Why are you interested in our market outlook? You should be interested in getting more weapons to fight your war. Why the economy of United States? Well, I don't want to bore you with that. I'm going to be analyzing that in the next video. Thank you for watching my video today, and please don't delay, start investing, and I will see you on the next one. My name is Peter Ads. Thank you, and bye for now.